Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 26th of June 2023 and here are the top stories for the day. Can Byju revive its fortunes? Will chips, jets and rockets propel India-US ties? What do Accenture's Q3 earnings mean for Indian IT stocks? And India-US deal, what are jet engines? Byju's juggernaut has come to a grinding halt just over a fortnight after it missed its interest payment on the $1.2 billion loan and took the lender to a court. Its auditor has quit. Deloitte, which was vetting Byju's book for the last 6 years, cited a long delay in its financial statement for the year ended March 31st, 2022 as the reason for quitting. So in today's first segment, Tariq Ahmed tries to answer if the country's most valued edtech company will be able to revive its fortune. Let's find out.
EdTech startup Byju had declared the financial numbers for the year ended March 2021 in September 2022. It was a delay of over 18 months. And now, statutory auditor Deloitte Haskins & Sells has quit over a similar delay in filing of financial statements for the year ended March 31st, 2022. The statements were due to be put before the shareholders in the annual general meeting by September 30th, 2022. According to reports, 3 board members have also quit, but the company has denied this. In a statement, Byju said it has appointed BDO as its new auditor. Deloitte, one of the world's largest auditing firms, was slated to audit Byju's books until 2025. But its sudden exit has not shocked many, given the slew of developments around the edtech company. Just a few days ago, in the beginning of June, Byju skipped an interest payment of about $40 million on $1.2 billion Term Loan B or TLB and dragged the lenders to court for alleged acceleration of the loan. And in its 2020-21 results, which were filed in September 2022, Byju posted loss of 4,588 crore rupees. It was 19 times more than in the preceding year. The Directorate of Enforcement recently conducted searches at several premises linked to Byju as part of a probe into alleged violation of foreign exchange rules. Byju was valued at $22 billion in 2022, but its valuation was slashed to $8.4 billion earlier this year by BlackRock. So what went wrong?
The founders were very aggressive, both in terms of sales tactics to customers as well as to investors from that perspective. What is not clear, or at least the Deloitte letter seems to suggest that the numbers that they have not been given the numbers in the first place, and so that also brings to question whether Byju has requisite processes in place to even capture the numbers. A large company like Byju should have concurrent audit in place, but the fact is that though it is 15 months, they have not yet finalized the financial statements of FY 21-22.
So what is the way out?
I doubt whether the company can get back on track, and it seems that it could be getting deeper in the quagmire. The climb for Byju was fast, but I think the fall seems much faster. Now, what can they do to set things right? I think the issues are extremely complex. Maybe Byju will have to get down to the brass tacks. First, possibly set the HR right and improve the employee morale. Get their balance sheet audited, bring out all the skeletons once and for all, and possibly get the Akash IPO done at realistic valuations so that at least they can clear off some debts. I mean, all this is easier said than done, but let's see if they're able to pull it off.
Experts suggest that a large company like Byju's should conduct their audits on time to establish its credibility and responsibility towards its lenders and stakeholders. Considering the opportunities in the edtech sector, there's still room for hope. But Byju's has to go back to basics and should resolve its governance issues to rise above the crisis.
She'll soon be quoted on the front page. Business Standard.
Notwithstanding Byju's troubles, India's edtech market is expected to grow to $10 billion by 2025. India is the second largest market for e-learning after the United States. Moving on, ties between India and the US entered a new phase last week when Prime Minister Narendra Modi visited the country as a state guest. A clutch of agreements was signed during the period. Bhaswar Kumar takes a look at three key developments in the fields of semiconductor, space and jet engines. And he asked experts if these deals will take the relations between the two nations to a new high. Let's listen in.
When the Honorable Prime Minister and the President held their discussions in the White House after the ceremonial welcome, technology featured very prominently in the discussions. There are roughly 20 to 25 areas of technology partnership that have been identified in the joint statement.
The key development during Prime Minister Narendra Modi's state visit to the US was the understanding reached between India and the US regarding technology transfer and joint research and production in key sectors, including space tech, semiconductors, 5G and 6G, AI, quantum tech, military jet engines, green hydrogen, and other emerging renewable technologies. The joint statement issued by the two sides said PM Modi and US President Joe Biden affirmed that technology would play the defining role in deepening the India-US comprehensive global and strategic partnership. Vowing to reach new frontiers in space cooperation, they also hailed NASA's announcement that it would provide training to Indian astronauts, with the goal of mounting a joint mission to the International Space Station in 2024. India has also decided to join the Artemis Accords, which brings like-minded nations together and involves a non-binding set of principles designed to guide civil space exploration. It is an American-led effort to return humans to the moon by 2025. Coming to chips, the joint statement said PM Modi and President Biden welcomed the MOU on semiconductor supply chain and innovation partnership, which would help coordinate the US and India's semiconductor incentive programs. US semiconductor giant Micron also announced plans to build a new assembly and test facility in Gujarat to manufacture and export random access memory DRAM and flash memory products. The $825 million plant has been approved under the modified assembly, testing, marking, and packaging component of the center's semiconductor PLI scheme. Set to be developed over 2 phases, the plant will see construction beginning in 2023 and will turn operational in late 2024. The combined investment by Micron, the center, and the Gujarat government will be up to $2.75 billion. Coming to defense ties, PM Modi and President Biden welcomed the adoption of a defense industrial cooperation roadmap between the two countries. The most anticipated development in this sector came on June 22nd, when GE Aerospace announced that it had signed a memorandum of understanding with Hindustan Aeronautics Limited to produce fighter jet engines. The agreement includes the potential joint production of GE Aerospace's F414 engines in India. But a release by GE Aerospace said that it was continuing to work with the US government to receive export authorization for this. While there has been no official confirmation yet, it has been reported that the US has agreed to transfer around 80% of the engine's technology by value to India. If true, this would be unprecedented, since the US has not transferred such technology to a non-ally in the past. All this leads to a crucial question. Will technology cooperation be the key driver of India-US ties?
I must say an emphatic yes. for a reason. For India and US to start talking of collaboration, the basic fundamental there is the technology. For varieties of reasons, this has not happened in spite of extremely good intents from both countries. Of late, we actually have seen that the leadership at both countries is trying to spend enormous amount of time together to get it open. ITAR becomes one of those major regimes under which obviously bulk of what these initiatives keep talking of used to get blocked, clearly understood at NSA to NSA dialogue, and through that we are hopeful that it will now get resolved. Should it get resolved, and as and when we actually hear about this part, it would open floodgates of relationships.
India-United States partnership is certainly headed northward and in a strengthened manner. And I have absolutely no doubt that technology will certainly be a part of it. We have been at the receiving end of technology denial regime. Now we are hopeful that these will ease in terms of critical technologies, in terms of defense technologies, national security technologies, etc., as far as the United States. But let me take you to the other facet of this huge relationship, IPRs. Do you really think that IPRs will be let down? What we, coming from the global south, would like, collaborations, will it really take off? I doubt it. But on the other hand, technology, finance, and other cooperations take place between companies. Countries benefit as a result. And that kind of technological cooperation will be one which I really think will happen.
While technology cooperation is one of the major axes along which India-US ties will progress, overcoming remaining US regulatory barriers will be the most crucial test for flagship India-US ventures like the Initiative on Critical and Emerging Technology and the broader relationship.
The United States has also emerged as the top destination for Indian IT exports. Select IT stocks have gained 10 to 26% so far in 2023 on hopes that a pause in policy tightening in the US may lead to a revival in IT spending. However, latest earnings from Accenture suggest that a recovery is still not in sight. So are IT companies staring at tough days ahead? Harshita Singh finds out in our next report.
IT major Accenture has reported inline constant currency revenue growth of 5% on a yearly basis in Q3. However, the company lowered the top end of its FY23 revenue guidance by 100 basis points to 9%. This came as the company saw a slowdown in order wins, weakness in the communication, media, high-tech and financial verticals, and the North American region. Given the rising caution among clients, brokerages have reiterated a cautious to negative stance on the Indian IT sector. For instance, analysts at Jefferies have lowered their FY24 growth estimates for IT companies by 50 to 150 basis points. In a recent note, they said, the demand outlook has been worsening amid continued pressure on discretionary IT spending. Q1 FY24 will likely be weaker than expected, and rising risk to demand recovery in the second half of FY24 may lead to further PE derating. However, even though the near-term weakness seems inevitable, analysts still see IT as a good long-term bet.
As far the IT stocks are concerned, in the medium-term perspective, the prospects look weak because of the looming global recession worries and US slowdown, some kind of negativity. But investors with a longer-term perspective, definitely they can utilize the downtrend in the large-cap IT stocks to take the position for a longer-term perspective. Business prospects are quite strong, and once the growth comes back across the globe, IT stocks are going to take the advantage, and also they can. If you see the longer-term trend, if you see the IT stocks for a 10 years, 5 years perspective, IT stocks are outperformed the other sectors.
Among stocks, technical charts show a positive trend for HCL Tech and Coforge. while the trend for Infosys and Wipro looks weak.
Among IT stocks, HCL Tech and Coforge are showing promising chart, while Infi and Wipro are indicating a negative bias. Coforge can rally to 4,800, having support of 4,200. Likewise, HCL Tech can rally to 1,300 with a stop loss of 1,100. On the other side, Infi, which is having a negative chart structure, is showing an indication of falling towards 1,200 rupees with a hurdle placed at 1,350.
Thus, IT stocks could come under pressure over the next few months. Long-term investors can look to use the weakness to increase their allocation to the sector. Today on June 26th, markets will trace global cues for direction. A new IPO of IdeaForge Technology will also open for subscription.
He's making plans for an early retirement. Business Standard.
Let us shift our focus back to the subject of PM Modi's recent US visit. Giving new wings to the India-US ties, American jet manufacturer General Electric and India's Hindustan Aeronautics have signed a pact to produce compact aircraft engines for the Indian Air Force. The agreement paves the way for the potential joint manufacturing of GE's famous F414 engines in India. But ever wondered what exactly a jet engine is and how does it work? Let's find out.
A jet engine, which is also called a gas turbine, pushes an aircraft ahead by releasing a jet of heated gas. The jet here means the discharge of a mix of hot exhaust gases produced by burning of fuel with air. According to NASA, the engine sucks air in at the front with a fan. A compressor, which has several blades attached to a shaft, then raises the pressure of the air. The blades spin at very high speed and compress or squeeze the air. As the compressed air reaches the combustion chamber, fuel droplets are introduced to the compressed air. Combustion chamber is part of the jet engine that contains multiple tubes that discharge fuel. When this fuel meets with the compressed air, combustion happens. The burning gases then expand and blast out through the nozzle at the back of the engine. As the jets of gas shoot backwards, the engine and the aircraft are thrust forward. There are 6 types of engines, and each engine has a slightly different design and is used in different kinds of aerial vehicles. There are a number of companies engaged in manufacturing these jet engines, mostly based in the Western world. Prominent jet engine manufacturers include Pratt & Whitney, General Electric, and Honeywell Aerospace, which are based in the US. And then Safran in France, Rolls-Royce in the UK, Aviad Vigatel and NPO Saturn in Russia. Commercial jet engines can cost between $5 and $50 million depending on the size and use case requirements. The engines used in the Ace US fighter plane Lockheed Martin F-35 cost anywhere between $45 and $65 million.
Nation's trusted bank, SBI, the banker to every Indian.
India had made an attempt to develop jet engines. It had sanctioned the Kaveri engine project in 1989, but the project could not achieve the desired results despite multiple attempts. That's all for today. For more news, views and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.